Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menasce. This is the weekend edition where we interview notable people from the world of real estate investing. Today is no exception. We've got a great guest all the way from the wilderness in California, up near Yosemite. Welcome to the show, Gary Boomershine.
Yeah, Victor, it's a pleasure. Super happy to be here. And the last time I was on your show was pre-COVID. So what a different world we're all in today, right?
Absolutely. So much has changed. Now, you've made the decision to relocate out of the Bay Area. Maybe we can talk a little bit about that, what drove that decision. But would love to get your perspective on what's happening in the bigger market picture. You're a big thinker, and I know you're looking at the big picture. So we'll maybe focus most of our time on that. But what drove the decision to get out of the Bay Area?
Yeah, I've been told this now, been on hundreds of podcasts, and I love real estate. I'm probably the anti-Wall Street guy. It's like every time I invest in Wall Street, I just don't get it. I like things that are simple. It's the keep it simple, stupid model, stuff that I can value. So I love real estate, been around for a long time. I'm probably noted as like the Peter Schiff of the real estate market. For those of you that don't know Peter Schiff, he's sort of the anti, the world's caving in, but he's been pretty much right on all the market turns.
Well, I love Peter, and he's a great friend. I think it's been said that he predicted 18 of the last 2 recessions.
Yeah, I've been following him for decades. So I've been in real estate my whole life. I grew up in an entrepreneurial family. I was a licensed agent when I turned 18. That was in 1987. So I held my real estate license for 18 years. I went down, paid for college that way. I got a computer science and engineering degree. I was going down the Silicon Valley route, and I loved it. Did that for a long time, and then decided to go full-time real estate investing in 2004. So people call me an OG. I guess that's an original gangster. If you've been through multiple market cycles, that's what they call us or call me. I've been saying this, Victor, for probably the last 4 years. Out of the last 100 interviews, maybe on my podcast, I talk about real estate's been a 7-year cycle for well over 100 years. Just happens that it's actually the 7-year cycle has been almost to the day, been to the Shemitah calendar. That's the Jewish calendar if you count the number of days. So literally for 100 years, it's been a 7-year cycle. It just happens that this cycle has gone, I think we're almost to year 13. So I've been talking about real estate as a cycle. It's a great thing. Those people that understand it do great. People that don't usually get wiped out. But there's a cycle, and they have a lot of similarities. There's a lot of people right now that, this is the new normal, full speed ahead, and you can't lose. But we're in a euphoric stage of real estate right now. It's a lot of stuff. Yes, every cycle has similarities, but this particular cycle and all the other ones, they're a little different. What I've said is that at the end of the 7 years, it's not just natural supply and demand that has the shift. We're in a fiat currency system, which means it's run by the Federal Reserve, which most people don't even understand what it is. It's money out of nothing. It's made out of debt. It's run by people that Federal Reserve is nothing federal or a reserve. It's a private institution. I'm not a conspiratorial guy. I'm more of a capitalist of how do you actually take advantage of that and do what the banks do, right? Do what the smart people do. Every cycle has had what's called a boogeyman event. If anybody watches me over the last 4 or 5 years, I always talk about there's been a boogeyman event. Call it what you want. There was 9/11. There was the 2008 mortgage collapse. This one is COVID. I don't think anybody ultimately, when we see all the black swans that happen, nobody's going to disagree that this was not the event. So we came together as a family and basically looked at, sort of everything, and we decided to make a move. So we unloaded pretty much everything and went more into a cash position. I'm more lending and hard money in first position notes. I've been teaching people for a long time to keep the best, sell the rest, and be prepared for 2 things. One is a market swing, correction, especially in the coastal areas, where I think that people are going to need to be prepared for having operating capital because, their reserves may be off. So be real careful for being able to cover your interest payments in your loans in the event of a change. That's usually a 6 to 18 month change followed by massive inflation. where we're going to all want to hold real estate assets as a true asset, a real asset. And because there's going to be a massive transfer of wealth that we're about to experience right now. I think that the transfer of wealth is going to be the biggest that we've ever seen in history. There was a huge transfer of wealth in 2008. I think we're going to see the bigger one now with the middle class shrinking. And so those that get it and prepare are going to do great. And those that don't are going to get wiped out. So we decided to make the change.
Yeah, I share that point of view. And I think in an inflationary environment, three things happen. And you see this throughout history. Number one, people on fixed income have their purchasing power wiped out. People savings get wiped out. And similarly, debt gets wiped out. So if you know those are the rules of the game, how can you structure your affairs so you're on the winning side of that trade? It's really that simple. So many people have been taught the basics, not to overquote Robert Kiyosaki, but go to school, get a good job, save your money. And I know he says savers are losers, but in this instance, savers are losers big time because their savings get wiped out and the prices will appreciate faster than they can save for a down payment. And so it's a set of market conditions that favor those who are willing to be aggressive on the debt side, load up on debt, do it aggressively but responsibly, if I can use that contradiction, and make sure that you end up on the winning side of that trade. So for you today, we've heard an awful lot about the pandemic and what it was supposed to do to the housing market. At one point, there were supposed to be 8 or 9 or 10 million homes distressed in the market. Then it was 4.5. Now we're hearing maybe 1.5 million houses in America are sitting beyond in that serious default situation or that seriously delinquent situation where they're more than 90 days late. And it looks like there's a lot of institutional money sitting on the sidelines waiting to scoop up those properties if they were to appear on the market in large numbers. So a lot of people are looking at it saying, with all the money printing, there's too much money in the system, we'll be okay. What do you think?
Yeah. So first off, I think real estate in a long-term play is the play, as well as first position mortgages. Do what the banks and the smart money are doing. If we look at the smart money right now, countries have been buying physical assets, physical gold and silver. Not saying anybody should do that, but 15% of all real estate transactions right now, most of us know this, are being bought by Blackstone, BlackRock, Vanguard, institutional big money. One of the largest defaults right now that we're dealing with is a Chinese company that's defaulting literally right as we record this in China that I actually think is going to be like the Lehman Brothers that brought down the mortgage collapse. Biggest default in history, real estate history, is happening in China that's really not getting a lot of mainstream news. I think that real estate is a great play and banking or lending is the play. Long term, I think getting into real estate is where we're going to want to be. Commodities in terms of things like our basic, food and gas, we're going to see a massive, massive increase over time. And how we're going to counter that is being able to have great loans on properties or smart debt, as you mentioned, that's going to look like incredibly cheap in 2 to 3 years and values of properties for those that can keep them. But I do think that we're going to see a very interesting blip in the market that's going to be about 18 months. There's something that very few people are chatting about. I think anybody in real estate should look into and understand. It's the Great Reset. It's Klaus Schwab at World Economic Forum. He runs the World Economic Forum. It's part of the United Nations in terms of what the reset is. It's a change of currency. And he has a great book called COVID Great Reset. It's a little scary for a lot of us because things change worldwide. I want to follow the tea leaves and say, how do I maneuver through this and be on the right side of the curve? I think you can't print money like they're printing right now, the $3.5 trillion. I mean, they're printing money. We couldn't even cover before COVID. It's going to be March of 2020, which is last year. We couldn't actually even in the United States, we couldn't even cover the interest payments on our debt. And then I don't even know what is it, $8.5 trillion more that's been printed. So that's going to come at a cost. It's going to come back to the average us, all of us on this call, the average American, in terms of how we repay that debt that can't be repaid anyway. So from my perspective, I'm teaching everybody. I've been coaching people for a long time. I don't have the crystal ball. It's just, we have history as a great indicator of the future, right? So what I'm telling everybody is the 3 Ps. You want to protect what you got. You want to pivot, and then you want to profit. I think part of it is getting, right now it's like make smart decisions. You want to buy right. I always tell everybody, don't go out and do what everybody else does. Look at the smart money, even Warren Buffett, right? It's like buy low, sell high. You want to, he calls real estate, true real estate investors a passive investor. Somebody that has money, they buy a physical asset, they follow the laws, and then they actually hold it for the long haul and take all the advantages. We call that ideal. That's an acronym for all the advantages that we still have in real estate. So I think this is a time to be really smart in terms of your investments. I think we're going to get into a world that those people that are doing the 3 Ps, protecting and getting prepared, are going to see incredible buying opportunities. On the apartment side, I think there's going to be opportunities to upgrade. Right now, a lot of people are buying, depending upon what class of an investor you are. If you're a syndicator, doing syndications, you might be going after the higher end properties. But a lot of apartment buyers are, because of the market and what they can get their hands on, they're buying like C and D properties. I think there's going to be an opportunity to upgrade into B and A class given the market. I think there's going to be incredible buying opportunities. There's going to be a point in time where I think the inventory, a lot of people are saying, oh, there's never going to be the inventory. It's shadow inventory. We're going to see it. You can't, right now, there's still, because of the Emergency Authorization Act, they're still printing money and giving money away for free, right? All this forgivable debt, that's still going on. There's a point in time where the musical chairs, the music is going to end and everybody's going to be popping into their chair. And I think there's a lot of companies right now that are in the know. I think most of us are not in the know. And, we're all behind the curve, as it always is. And I just think that it's like, be prepared, buy right, make sure you're restructuring the debt if you've got it. I believe in a lot of free and clear assets right now. I've been coaching students who show me this, a lot of people in the single family are doing the Burr method. They're buying houses and they're levered up beyond levered up. And that's what they're being coached on. And so I'm showing them and coaching them to take a percentage of your assets and making those free and clear. And don't just bet on one strategy. You should be looking at real estate as a long-term play. There's 3 buckets: cash now, cash flow, and cash later. Just like the Monopoly game, if you run out of cash, you're going to be losing properties. And then what happens with most investors is they throw bad money after bad money, and that's how they get tanked. And it takes, some of these people never recover. So I'm excited about this market. I've been, it's like, COVID. I moved up in the area where I'm in California. Like California is it's the communist state of California. I can't even write a C on the front of it. It's like with a K. Like they just went in with all kinds of new mandates in my county, regardless of where people stand on any of this stuff, vaccine and this thing and that thing and masks. To me, none of that matters to me. I just decided to go into an area where, there's no indication of any problem up here. I'm in a market, it's booming. People are like-minded. I've funded a couple of deals this last week. I closed on a Airbnb property yesterday. I bought a property, a single family. I'm more in the single family market just because I like the returns and easier for me to run the math. Closed a property, went into contract on a property 2 days ago for about 50 cents on the dollar, 55 cents on the dollar, where I got a bad tenant. I got to go evict a tenant, but I'm getting it at a screaming deal. And then I'm closing on another one going into contract today or tomorrow that's almost 100% owner finance. The older 75-year-old seller who's super smart as a tack, but she has concerns with capital gains. She has a great granddaughter that she's a guardian for at 75, who was born of a drug addiction situation with the grandkids. And so she is structuring a deal where it's actually 2% owner financing that allows, She wants to be out of property management, and I'll probably make $400,000 or $500,000 over the next 20 years on this one deal as a single family house. So anyway, sorry to give you so much detail, but I'm passionate about COVID, but in totally different ways. I think this is a transformation of wealth and an amazing opportunity. And a lot of people, this is all fear. So it's like fear is false evidence appearing real. Let's use it as an opportunist time, and also speaking truth with one another.
I love it. Well, Gary, if folks want to connect, if they want to learn more, see some more of your material, what's the best way?
Yeah, I have a website. I focus more on single family and lending, and also maneuvering through COVID. I am writing a new book called actually the book is ready to go. It has not been published, but I'd love to give your whole audience, all your loyal followers, my book. It's called The Freedom Code. If you want to get a free copy when it's produced, and some of my tools and videos on how to build a business that works for you. And as we maneuver through this, you can go out to this website, realestateinvestor.com. So realestateinvestor.com/growth. And so realestateinvestor.com/growth. And you'll get a free copy of my book. The conservative, everything that we've talked about today is in there. It's my passion for life. And then I have a podcast, realestateinvestor.com podcast. And then I'm the largest marketer. Realestateinvestor.com is a business that I've been running for a decade. We're the largest marketer in the real estate niche. So anybody that wants to go find off-market deals, direct mail and cold calling and text messaging with experts and a fully trained phone team that actually does all the work, you can go check us out at realestateinvestor.com if you need any help.
Fantastic.
Anything else, just reach out. I'm not huge on social media, but my team gets that back to me. And, anybody that needs help, I'm pretty passionate about helping people or trying to figure out and crack the code on how to maneuver through this whole thing.
Well, terrific. Well, Gary, love the perspective. And for listeners at home, definitely reach out to Gary at realestateinvestor.com. Check out his podcast and his new book, The Freedom Code. And in the meantime, have an awesome rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.